Hello, everyone. Welcome, guys. Welcome. Guys, we'll get started shortly here. Welcome, everyone. Welcome. We'll get started shortly. Welcome, guys. Welcome. Welcome, everyone. We'll get started shortly. Our beginners class, guys, our beginners class on Saturdays. Beginners and Q&A. Welcome, everyone. Welcome. We'll get started shortly. Welcome, guys. Welcome, everyone. Welcome. Hey, Joe. Welcome.
Hey, good morning, David.
Hello, hello. Hey, Louis. Welcome, Louis. Hey, Dean. Welcome, Dean. Hey, Betty. Welcome, Betty.
Good morning, David.
Hello, hello. Hey,
Hey, good morning,
Austin.
everyone.
Hey,
Good morning, everybody.
Colin. Welcome, welcome, guys. Oh my goodness. It's great to we stopped doing the Q&A class and the beginners classes because we started doing live stream. And I was talking to Dean. Dean, I'm glad you were here. And hey, Jonathan. Welcome, Jonathan. And Dean had mentioned perhaps new traders needed to really needed the beginners class. So decided this is the only day that I feel we could do it. During the week, we're extremely busy, all right, with trading the markets. We do live trading on YouTube every 1 second here, guys. I'm trying to send every evening, all right, every evening. So it's good to, this is the only down day that I really have. We do coaching on Friday. So Saturday morning was a good time, I feel, to do this class. So Dean, thanks for the feedback. All right.
Thank you for your time, David. Thank you for your time.
Thanks, Dean. So during the beginners class, what we'll focus on, one second, guys, let me send a quick text here. Sorry about that. 1 second here. Okay, awesome. Okay. So this is geared for our beginning traders, but also for our experienced traders. All right. So some of our experienced traders, like Dean, through the week, it's hard to get your questions answered as far as the markets. All right. So this is not only for beginning traders, but for our experienced traders also. And in the past, what we've done is we like to get our Isma. Okay. If I mess up your name, guys, I'm horrible with names, but faces I do not forget. So if I mess up your name, just forgive me. Okay. So
thank you.
How is it pronounced?
Yes, Asma.
Asma. All right. I was close. So welcome, Asma. Welcome. All right. So what we want to do is in our beginners class on Saturdays, we'll have this class every Saturday. And what I would like to do is get as new traders, right? As new traders, I know you guys are excited, okay? But there's some things we need to learn, we need to understand about trading, all right? And my goal, just to give you guys some feedback, I've been trading for about over 25 years now. All right. So I've been doing this a long time. I work with traders, right? I work with individuals that are looking to trade. And about 13 years ago, about 13 years ago now, I started a company called Monster Trading Systems. Okay. And with that company, we do coaching. But I also build trading systems, and we might go through some of the systems today, all right, to help you with your trading career, all right? Now, I want to ask you guys, as new traders, we've got some new faces here, all right? What are some of the things, right? Whether you guys haven't taken a trade at all, whether you've traded for a week, a few months, what are some of the things you guys feel that you need to learn about, okay, when it comes to trading? All right. So I'm just going to open it up. So what are some of the things you guys want me to touch on? All right. Hey, Betty, go ahead, Betty.
Risk management and also the emotions.
Okay. So risk management. Okay.
And the emotions.
And your emotions. All right. All right. And Betty, you've been to several of our training classes, right?
Yes, I have. Yes.
And, all right. So risk management and emotions, and that's Betty. All right. We'll touch on that. Good job. How about you, Louis?
When to entry and exit a trade.
Okay. Very good. All right. Thanks,
and
Louis.
how to set a stop loss.
So entry,
exit a trade, and how to set a stop loss.
And stop loss. And Louis, you've been through our coaching, our one-on-one coaching. Thanks for coming. All right, very good.
Ready for the next one, though.
Yeah, good job. All right. So we'll touch on that. All right. And Darlene.
Yeah, thank you for the opportunity, David. I'm Darlene. I have been referred by Betty. Thank you. So I'm new. I just started a week ago. And what I would like to learn for now is to learn how to analyze a graph and to determine good entry and exit point.
So how to analyze your charts and to find entry, best entry. All right.
Yes.
I'm writing this down, best entries and exit. Okay, so similar to Lewis. Okay. All right. Okay, awesome, awesome. Thanks, Darlene. And we had one other person. Lewis, did you have another question? I see your hand is still up. All right. No one else? Any other questions you guys want me to touch on? All right.
David, one question, Mary.
Hey, Mary. Hey, Mary, welcome.
Question about how many forex pairs one can trade at a time.
Okay, how many? I just had a discussion with one of our traders yesterday on that. All right. So how many forex pairs to trade at a time? All right. All right. And Mary, you've had that question before, huh? I know. I remember.
Yes, but my experiments are not working.
Okay. All right. All right. All right. I'm just writing this down. All right. As we go through this, guys, this is your time. All right. So we're gonna go from now to about 12 noon Eastern time. All right. We might go a bit longer. All right. But this is your time to ask any questions, especially for our new traders, try to figure things out. Okay. All right, so we'll start with Betty's question. All right, so risk management and emotion, and then Lewis, Darlene, and then Mary. But everyone else, just go along with us. Take notes. All right, take notes. All right, and as I go through this, you guys can stop me at any time. All right, at any time. All right. I'm going to share my screen. All right. So we'll talk about risk management and emotions. Now, let's do this. When we talk about risk management, and we'll tie in emotions, you guys should see my screen here. All right. If not, please let me know. All right. Support and resistance. All right. Support and resistance, the keys to your success. All right. Now, the reason I want to, Betty, risk management. All right. Everyone looks at risk management a little differently, right? You know, when you can set stop loss, you can use that as risk management, right? A lot of traders use a percentage of their account as a way to manage risk. All right. You can look at you know, if you buy a stock at $2, right, risk reward, and you hope to get it to like $10, which is the high, we could look at that. How I like to look at risk, right, risk management is this way. All right. And I'm going to bring in some of my drawing tools here. All right. Now, when we trade, we use support and resistance. Now, I don't want to, we might get into support and resistance more in detail, okay? But right now, let's talk about how we manage risk, all right? The best way to manage risk is trading within support and resistance, all right? So, Betty, the best way to manage risk is to trade within support and resistance. And Betty, you've been with us for a while, right? You've been coming to the classes. Well, what do you think I mean by that? Right? The best way to manage risk right? Because your question, risk management, is to trade within support and resistance. What do you think I mean by that?
I think by that you mean buying at a support and then exit at the resistance.
Okay. Yes, but the reverse. The reverse. So write this down. Write this down. And everyone, right? So rather than buying at support down here and selling at resistance, what we want to do, so rather than buying here and selling here, we want to buy at resistance and sell at support. All right. So we want to buy at resistance. All right, Betty? And then we want to sell at support. All right. Now, why do we want to buy at resistance? Anyone? Anyone? Why do we want to buy at resistance and sell at support rather than buying at support and selling at resistance? Anyone? Louis, go ahead.
And we sell at support because if the market goes down, we can sell short.
Okay, so if we, so we're going to sell at support. If the market goes down, we could go short and sell short. Very good. All right. So we don't want to buy in this area here because this is what? What zone is this? This is seller's territory. Okay, so better just think of this as seller's territory. Support, seller's territory. All right. Resistance, buyer's territory. So we want to buy at a break of resistance, sell at a break of support. Right? Not the reverse. Buy at the break of resistance, sell on the break of support. Very good, Louis. Very good. All right. Risk management. Risk management is important, right? And the way we want to manage our risk is by here, buying on a break. Let's talk about why do we want to buy on a break of resistance. All right. When we buy on a break of resistance, just know that when the price breaks resistance, that buyers are now in control. Buyers are coming into the market. All right. Price breaks resistance, buyers are now in control. All right. If the price breaks support down here, sellers are in control. All right. So the way we manage, and I want you guys to think of this in simple terms, very, very simple terms. The way we manage risk, okay, is by selling when sellers, just think about it, right? When sellers are now entering the market, all right, we need to exit. We need to close our trade. What would happen, right, if we're looking to manage risk? What would happen if we do not exit the price, if we do not close the trade when sellers enter the market? What would happen? What would happen? What would happen? Anyone? What would happen? Just take a guess. What would happen? If we entered the market, right? We bought a stock, let's say Facebook, and sellers, we're talking about risk management here, right? Risk management, right? What would happen? Go ahead, Betty.
Yeah, David, I don't want to answer the question, but I would like you to pull out another representation of the chart, which is the 4 market phases that I will better understand the breakup, support, and resistance.
Okay. All right. Let's do that then. Okay. All right. Okay, so here we are, Betty, the 4 market phases. Okay. Okay. All right. Now, some of our new traders, might not be aware of this. Okay. All right. But we might get a chance to go over this more. Okay. So Betty, how can we manage risk using this 4 market phases? How can we manage risk using the 4 market phases? And anyone else? Louis, I see your hand is up. Is that from previous? Okay. All right. I want you guys to think of this, right? So support and resistance. Here is resistance. Here is support. All right. Here is resistance. Here is support. 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 We always want to buy on a break of resistance and sell on a break of support. This is where we'll manage risk. All right. We want to exit here on a break of support. All right. This is your best area here to manage risk. All right. We're going to buy here, sell here, buy here, let's say, sell here, buy here. And I know we're going short here. Don't worry about that. Just follow the support and resistance lines. All your entry and exits will be done between support and resistance. That's how we manage risk. Okay, that's how we manage risk. So Betty, all right, the way we manage risk, right, is by buying on a break of resistance, selling on a break of support. So every trade that we enter, all right, every trade that we enter, just keep in mind, if you buy, the price breaks resistance and you enter here, your management, your money management will be to exit on a break of support, right? Regardless of what our opinion is. All right. So not a percentage. Most traders will look for a percentage or a fixed amount, right? The way we manage risk is by support. And now, if you look here, if you have a support and resistance line that's wide like this, guess what? You have a wider, and that, you know, your time frame would have something to do with that, right? Whether you're trading on a daily time frame, all right, or let's say a 30-minute time frame, a 1 hour time frame, 60-minute, right? But not only that, the wider your support and resistance, the wider your risk, your money management. All right. The narrower your support and resistance, right? Because you're gonna enter here, exit here, right? You're gonna minimize your losses here. Here you're gonna increase your losses. All right. So when we think of risk management, and we can certainly put some things in place, right? We can certainly put some things in place, but I just want you to think, right? The way we manage risk is by buying your entry, how you enter and exit, right? That should be determined, right, prior to entering the trade. All right. We make money based on how we enter the trade. So prior to entering the trade, we should know where we're going to buy and then where we're going to exit. Right. Now, you also mentioned emotions, right? By doing this way, all right, Betty, by doing this way, guess what? We can systematically trade because we know where what entry is and where our exit. This will minimize our emotions. We'll always have emotions, right, when we trade, because we trade in our hard-earned money, right? But having a fixed, somewhat fixed entry and exit, that will minimize our emotions, right? Make things more systematic. All right. Does that help? Does that help, Betty?
Yeah, it helps, but at the same time, I feel that if I had stayed in the trade, the price would have went up, and so instead of exiting at the support, if I stay a little bit longer, maybe I will make profit.
If you stay in it longer, if it breaks support, you might.
Yes. If it breaks support and goes back up, like I don't see any representation here, but sometimes if you allow me to write on your screen with my EpiPen, can I do that?
Well, no, let's go through it. Let's go through it now. Okay, so what you're saying is, if it breaks resistance, if it breaks support, right? Breaks support, and you stay in the trade, right? Eventually it might turn around.
Yes.
Okay. What if it doesn't?
Yeah, then the loss is gonna be bigger.
Mm-hmm. And when do you get out though?
That's the question. That's bad if it keeps going down.
Yeah. Yeah. All right. So here was a trade here, and I'm just taking a random trade here. Okay. Here was a buy signal here to buy because the price broke resistance. Here was the sell signal to break support, right? And look, it kept on going down. So they don't always go back up, right? So let's say you bought here and got out here, and you didn't get out. Let's say you bought here, and to your analogy, right? Just holding on, right? Look what happened. And this was back, this buy, and this is just an example, and this is for everyone, right? The buy signal came in on, was that March the 15th, and here it is June the 6th, and it's still much lower, right? So are we managing risk when we do that? Are we managing risk? Not really, right?
No, not really. No.
Not really, not really. Okay, so what we're going to do is we're going to take your question, Betty, and then we're going to move towards Lewis's question, which is entry and exits, and then stop loss. Okay, entry and exits and stop loss. So we're going to tie in risk management, entry and exit, and then your stop loss. All right, and stop loss is a way to manage risk. And we're going to go back here with support and resistance. All right, you guys are doing good. You're thinking. That's what we want. Right. All right, so you guys should see my screen. All right, support and resistance. Okay, so let's talk about this. All right. The reason why support and resistance is important, all right, is because it gives us or tells us where we're going to buy and then where we're going to sell. All right, so that's why support and resistance is very important. All right, support and resistance is critical because it allows us to get on the trade. All right, which means where to buy. All right, so just know that price, whether it's a stock, option, forex, crypto, it doesn't matter. Price moves in 3 directions, right? Up, down, and sideways. All right, support and resistance is when the price moves sideways. All right, and support and resistance allows us to get on the trade. All right, support and resistance allows the price to slow down, the market to slow down, the stock to slow down to allow us to get on the trade. All right. Okay. All right. Just know that buyers, when we have support and resistance, like right here, all right, buyers are taking a break, sellers are taking a break, right? There's an indecision in price. No one has control of price, right? The sellers are not in control and the buyers are not in control, all right? So the way I want you guys to think, all right, is like this. Resistance, think of resistance as your ceiling, all right? Support as your floor. But most importantly, right, this is your area here to enter the trade, all right? But not only enter, to exit your trades. So write this down, everyone. We always want to buy on a break of resistance, okay? Because the buyers are now in control, all right? Just know that buyers are here, buyers are sitting here, buyers and sellers are sitting here, all right? When the price hits resistance right here, hit support right here, notice that the price keeps bouncing back and forth, never breaking. So there's indecision in price. No one is in control. Once the price breaks resistance, the buyers are now in control. Or if the price breaks support, the sellers are in control. All right, so Lewis, your entry, right? Where do we enter? We always enter when the price breaks resistance. We always buy to go long when the price breaks resistance. Always. We don't buy in here. All right? No one is in control. We want to wait. This is why support and resistance is important. All right? The keys to your success. All right? So we want to buy, always want to buy when the price breaks resistance. And then where do we sell? Anyone? We're going to buy here when the price breaks resistance. Where do we sell? Anyone?
Support.
Support. Very good, Jonathan. We're going to sell when the price breaks support. And why do we sell when the price breaks support? Because the sellers are now in control. All right? So, Lewis, your entry will always be when the price breaks resistance. All right? Your exit will always be when the price breaks support. And again, right? To Betty, this is your risk management. This is how you manage risk. There's another way to manage risk, which is what Lewis mentioned, right? A stop loss. All right? So you can manage risk by entering here when the price breaks resistance and then exiting here when the price breaks support. All right? There's one other thing we can do to manage risk. Okay, Betty? And that's what Lewis mentioned, right? Put in a stop loss. All right. Now, what is a stop loss? Anyone? Can anyone tell me what a stop loss is? Anyone tell me what a stop loss is? All right. A stop loss is an automatic trigger, right? An automatic trigger that you would put in on your broker's website to get you out of that trade automatically. So if the price goes against us, we can get out, right? Quickly, automatically. All right. So where would we put a stop loss? If we're gonna buy here on a break of resistance, sell here on a break of support, and we're gonna manage risk, right? Risk management, right? And we're gonna manage our emotions also. Where can we put in a stop loss to let the broker get us out automatically if we're wrong? Where would we put a stop loss based on buying on a break of resistance and selling on a break of support? Anyone?
Anyone else go into this?
What's that, Mary?
Below support.
Very good. And Mary, you know this. We know you. Good job. All right. Below support. So Lewis, right? Your stop loss and everyone else, right? Let me get a different color here. Hold on. Let me clean this up. All right. So we have resistance. All right. Buyers are coming in. Price breaks resistance. We're going to buy here. All right. When the price breaks resistance, we know now buyers are in control. We're going to buy when the price breaks resistance. All right. Price comes back down. Right. Hit support. All right. We are going to exit, get out here. All right. Very good. We're going to exit here. So we're going to buy here. All right. And then we're going to sell here. All right. When the price breaks support. All right. We could put a stop loss. All right. So thanks, Mary. All right. So Louis, we can put a stop loss right below right here. So we could put your stop loss right below support here. Now, some traders will put their stop loss right here. Some traders will put their stop loss right here. All right. Some traders will put, they will buy here and they will put their stop loss right here. All right. Why don't we want to do that? Why do we need to put the stop loss right here and not here, here, or here? Anyone?
Is it so we could purchase on the increase of share as it, should it go up? I'm assuming.
Okay. All right. Okay. Thanks. Thanks, Jonathan. Good. All right. Anyone else? Why do we want to put our stop loss here and not here like most traders? Here, here, or even here. We bought here, right? We bought right here. And let's say this amount here, let's say our resistance was, let's say our resistance here was $100 here. Support here was $50. Okay. Let's say our buy entry here was 110. All right. I know traders will put a stop loss right here at 105. All right. Or they might put it here at 80 and they might put it here at 70. All right. Why do we want to put the stop loss right below support? So this might be a stop loss here might be at $40. All right. Or 40,
so
let's say.
That doesn't take you out of the trade?
It's, yes. So that it won't take you out of the trade. But why? Why, Dean?
Because it has the potential to go back in your favor.
Yes.
In that consolidation area right there, it's you know, you don't know which direction it's going to go.
Yes. But more importantly is that who is still in control? Who is still in control in here within support and resistance? Who's in control of price?
The buyers.
The buyers. Very good, Joe. All right. Hey, Solomon, welcome. The buyers, guys. So this is still buyers territory. All of this is still buyers territory. So we bought here, all right? And I know you guys have seen this before, right? You buy here, price does this, all right? And then it does this, right? You guys have seen this, right? The only time we exit the trade is when the price breaks what? Support. All right. So we've got to put our stop loss below that support line. All right. As a trigger. Now.
So I have a question.
Uh-huh.
So the stop loss I'm new here, so see with me. So the stop loss doesn't necessarily mean you're leaving the stock completely. It's just
yeah, good question. So the stop loss, good. That's very, very good, right? Jonathan. So the stop loss means that you're getting out. You're done. The trade is done. That's your stop loss. When it triggers your stop loss, so very good. So we put a stop loss in here, in here, in here. Are we done with the trade? No, we're not done, right? We only done, the trade is only over when it breaks support, which is right here. That's your support line right here. All right, so if we're going to put a stop loss, Louis, we're going to put it below support because we know that now if the price breaks support, right, buyers are no longer in control. Sellers are now in control, right? Remember, we're going to buy on a break of resistance, sell when the price breaks support. So now sellers are in control. We have to get out of the trade. So remember, only put your stop loss where you know that the trade is over, right? Good job, Jonathan. The trade is over. And we'll know that the trade is over when the price breaks support. That's when we have sellers coming in to the market. All right, so we shouldn't be buying anymore. We should be selling. We should be exiting, getting out. Okay, so our entry, always entry when the price breaks resistance, always sell when the price breaks support. Now, there is one other trick to this, right? And it's this. Resistance becomes support. Resistance becomes support. Okay, so we have resistance here. Here is resistance. Let's say price breaks resistance here. All right, we have a buy signal here. All right, but now the price moves higher, and we call this the markup phase. Once the price moves higher, clears resistance. Now you're starting to trend. All right, resistance now, this resistance level changes, and now it becomes support. I know it's tricky. So now resistance becomes support. So now where would you put your stop loss? Anyone? Where would you put your stop loss now? And let's say, for instance, this is your same $100, right? Your $100 here. All right, let's say you bought same thing. You bought at 110, and let's say it's 160 now up here. Where would you put your Betty? Where would you put your stop loss?
Below my new support line, which is where 100 is.
Very good. Very good. Good job. Right? So you might put it at, this might be $90 here. All right, $90 you would move your stop loss here. So your stop loss is no longer here because just know your support and resistance will keep moving, right? It's dynamic, so they move, right? They move. All right, good job. Good job. And by doing this, by doing this, Betty, we can manage risk, right? We can manage our emotions, so we're not just guessing, right? We're not just guessing. We have a plan, right? We have a plan. Hey, Kevin, welcome. All right, we have a plan that is systematic, right? Now, you're not using a system, but the process, right? The process that you're following is systematic. We're not guessing our way through this, all right? So we're trading logically, right? We're following a logical process. And by doing that, Betty, that will reduce our emotions. All right. And we have very defined Lewis entries and very defined exits. And then we also have very defined stop losses here and very defined stop losses here. We're not just randomly putting a stop loss based on what we feel the trade will do or based on our risk tolerance. All right. Very good job, guys. Very good. All right. Now, Darlene, let's talk about chart analysis, best entries and entries, exits, entries and exits.
Okay.
All right. Let's talk about that. Now, Betty had mentioned the 4 market phases. So we'll start with that, and then we'll look at a live chart and how we analyze the charts. You guys are doing really good. Good questions, good questions. All right, so you guys should see my screen here, the 4 market phases that every trader must know. All right, I know Dean knows this, right? Lewis knows this. You've gone through the coaching. Solomon knows this. Mary knows this. Betty knows this. All right, so our new traders, I want you guys to take a picture of this. All right, take a picture, a screenshot of this. All right. So we're going to talk about how we analyze the chart, and we follow the 4 market phases. Okay. All right. Okay. The 4 market phases, excuse me, that every trader must know. All right. So again, take a picture of it. Let me clear it. All right. Take a picture of it. I recommend you guys print it, save it, laminate it, keep it with you. Okay. The 4 market phases that every trader must know. Okay. And Darlene, this is how we analyze the chart. All right. We don't just randomly buy. We don't just randomly enter the market. All right. There are 4 phases: the accumulation phase, phase number 1, the markup phase, phase number 2, distribution phase, phase number 3. All right. And our experienced traders that are here, this is good, right? We always have to go back to the basics. Always have to go back to the basics. So if you know this already, that's okay. We need to always go back. All right. Sharpen our tools. All right. And the 4th phase is the markdown phase. All right. So accumulation, markup, distribution, markdown. Okay. So Darlene, when we look at a chart, we should know what phase we're in. Either phase number 1, phase number 2, phase number 3, or phase number 4. All right. So when we look at a chart, this is how we're going to analyze the chart. We don't just randomly enter the market and start buying. All right. So let me go through it. Right. The 4 market phases, there's only 4. There isn't 10, just 4. So it's simple. Right. That every trader must know. And you guys must know this. Our experienced traders, they know this. Right. New traders, you have to know this. You have to know support and resistance, and you have to know the 4 market phases. All right. So, Darlene, I'm glad you mentioned, right? How do we analyze the chart? All right. The first phase is the accumulation phase. Second phase is the markup phase. All right. Third phase, the distribution phase. 4th phase, okay, the markdown phase. All right. And then we start all over again with the accumulation phase. All right. So accumulation, all right, accumulation. Just know that institutions, big hedge funds are buying, right? They're accumulating stocks or accumulating shares, and they're building positions, all right? They're building positions, all right? Can anyone answer this, right? Why are they building positions? Why are they building positions? Why are they building positions? Why are they building positions in the accumulation phase? Why are they building positions? No one? All right, so let's go through it. All right, this is important. So let's say that same $100 price here fell to $50 down here. All right, do we want to buy at $100 at the high? No, right? We want to buy at $50, right? Same thing for the big institutions. Same thing for the hedge funds, right? They want a really good price. They want to buy the best price, right? So that's called the accumulation phase. All right. The accumulation phase will always be at the bottom, left, right, or left, middle, or right of your chart. So just think, we want a low price, so we want that price to come down, right? Flatten out, and we want to start buying. So that's what the institutions will do. They'll buy big blocks of shares in the accumulation phase, and they're building, buying shares, stocks, whatever it is, at a really cheap, low price, right? So that's the accumulation phase. Once they decide, our goal is just to piggyback. We can't move the market, right? So our goal is to piggyback on what the big institutions are doing. Once they're ready, they're done accumulating in the accumulation phase between support and resistance. Once they decide to move the price higher, right? Move the price higher, we'll know that they're moving the price higher when the price breaks resistance, right? Buyers are in, price breaks resistance. We're going to buy here. Now, that's called the markup phase. All right. So, Darlene, this is how we want to analyze a chart. When we look to buy, we're not buying, right, when the price is making new highs. We're buying when the price is low. All right. But not just low, right? When the price stops, right? When we notice that there's an accumulation phase, just like we looked at support and resistance earlier, right? And then our buy entry will come when the price breaks resistance. That's our markup phase. All right. So price is moving higher now. That's the markup phase right here. During the markup phase, we'll get accumulation again like this. That's called reaccumulation, where new buyers are now entering the market. All right. We can either enter here or just hold on to our original position here where we bought here. All right. So that's phase 2. That's your markup phase. That's also your trend, right? Your trend. We call that the trend. All right. At some point, price will stop moving higher. All right. Can't go on forever. Price will break what? Support. And now we know sellers are coming in. Red candles, sellers are coming into the market. Okay. That's the markdown phase. Okay. But before the markdown phase, what do we have to do when the price breaks support? Anyone? What do we have to do when the price breaks support? Anyone? What do we do when the price breaks support? We buy on a break of resistance, and where do we sell? We sell when?
Support.
Very good. We sell when the price breaks support. Very good, Lucas. All right, so we're going to buy here and sell here. That's our trade. So we're going to buy on a break of resistance, sell on a break of support, because guess what? Sellers are now in control. All right? All right. So Betty, if we stayed in here, right? Remember your analogy right here. If we stay in here and we don't get out here, right? We could buy here, but guess what? If we don't get out when the sellers get in, guess what? That what could be a very profitable trade is now a losing trade. All right. So we always have to enter and exit. We need a very defined entry and a very defined exit. Okay. All right. Very good. Phase 4 is the markdown phase. So that's where price is moving lower. All right. We can either we're going to get out, stay out of the market, or go short. Right. We won't talk about that. Short. We can just know that we can profit from the market going down. Within the markdown phase, we have distribution. So we have consolidation again, price break support. We have new sellers coming into the market, right? To push the price even lower. And then we start all over again with the accumulation phase. Okay. So Darlene, that is how we analyze a chart. So we can take this information here, right? The 4 market phases, and now we can take it to our chart. All right, we can take it.
Thank you so much, David.
That helps?
Yeah, definitely.
Very good, very good. Okay, so 4 phases. So I hope you guys took a picture of this. Okay, you have to know this. As new traders, All right, you have to know this. You have to know support and resistance. All right, support and resistance. And you have to draw in your support and resistance line. So as the price moves in real time, you've got to draw in your support and resistance lines, right? Right, so that you know where to enter and where to exit. Okay, what we don't want to do is we don't want to be selling. We don't want to sell in the markup phase, which a lot of traders will do. We don't want to sell in the markup phase, and then we don't want to buy in the markdown phase. All right, that's our chart analysis. If we analyze the chart, right, we should know if we split this in half. Hold on. If we split it in half here, all right, we split it in half. That's a crooked line here. We should know, okay, in the markup phase, we should be buying only. In the markdown phase, we should be getting out, selling, getting out, or shorting. Okay, that's how we analyze the chart. Okay, buying here, selling here, buying here, selling here. Okay, that's why this is important. All right, and within, and darling, within our chart analysis, we're gonna define our entries. So we're gonna buy here, sell here. We could have added more here. Okay, this would be our trade here. Okay, we don't buy here. We don't buy here and then hold on and hope. All right, we buy here when the buyers are entering the market. All right, we don't buy here when it's gone up too far. We buy here, exit here. Right when the buyers get in and right when the sellers get in. Okay, we don't try to get the very bottom because buyers are not in control yet. Right, this is seller's territory. We don't try to buy, we don't try to sell here because guess what? Buyers are still in control up here. We need to wait patiently, right? Control our emotions, and we want to sell here when the price breaks support. Okay, so let's look at live examples, some live examples, and then Mary will touch on the pairs, right? And then we'll be done. We'll open it up for some questions, and then we'll be done. All right. I know it's Saturday, so I don't want to take up too much of your morning here. But thanks for coming, guys. Okay. Is this helping? Is this helping, guys? Let me know. All right. We'll go through a couple of examples. Okay, Darlene. Let's see here. I'm trying to find an easy one.
Yes, David.
I'll find an easy one here for you. So we're gonna take the 4 market phases and we're going to bring it to the chart, right? So we can analyze. So this is how we analyze the charts. We're gonna take that information from the 4 market phases and we're going to analyze it. Let's do this. Okay. All right, Darlene. All right.
Yes, baby.
Okay. All right. Thanks, Joe. Thanks, Joe. All right. What phase is this here? What phase is this? What phase is this here?
Markdown phase.
Downtrend. Yeah.
Markdown phase. Very good. Very good, guys. Okay. Very good. Let's keep going. All right. What phase is this?
Markup.
Markup, yeah.
Markup. Very good. Who's in control? Who's in control? Buyers or sellers?
The buyers.
The buyers are in control. Very good. What phase is this here?
It's a markdown phase.
Markdown. Okay, very good. Good job. Good job. Okay. Okay. What's this line right here? What's this line right here? What's this line right here?
Breaking resistance.
Breaking resistance. Very good. Breaking resistance. What's this line right here?
And breaking support.
Support. It's not breaking support, but that is your support line, right? Okay. Is this candle here buyers or sellers? This candle right here, is that buyers or sellers? Who's in control? Right here. This candle right here. Who?
Buyers.
Buyers.
Buyers. Very good. Very good. So we should be what? Buying, right? Very good. Very good. What phase is this? You guys said the markup phase, right? You have the markup phase, right? Very good. Right? Do we have reaccumulation phase here? Are we in the reaccumulation phase here?
I will say not yet.
Not yet.
Not yet, right? Very good, guys. When will we have reaccumulation? This is a tricky one. When will we know that we've got reaccumulation? When do we know? Look at your four market phases, right? When do we know we'll have reaccumulation?
When there will be like an indecision between the buyers and the sellers.
Great. And when will that happen?
When it's neither going down or up.
Very good. And when will that happen? When will we know that we've got indecision and the price is neither going up or down? What do we need to have?
When it's breaking support back again.
All right, breaking support. So we need to have what? We need to have new support and resistance lines, right? So it will look something like this. Very good, guys. Right, very good. So we would have to have, this would have to happen to get reaccumulation. We would have to have a new support line here and a new resistance line here. All right, so we don't have that yet. All right, so we'll just let the trade go. Once we get new support and resistance line, and then the price starts to break through that resistance, now we have reaccumulation. Make sense?
Yes.
Yeah. So look here, all through that markdown phase, we never bought, right? We need that price to drop, fall. All right. We have resistance here, support here. That's the accumulation phase. Price breaks resistance. Our system give us a buy signal here, a blue arrow here to now buy. Green candles, price, buyers are in control. We bought here. So we would have bought here at about, what's that, 185 or so. And now it's at 296. All right. So we don't get out, right? Why shouldn't we get out? The price hasn't done what?
The price hasn't break the support yet.
Very good. Very good, Betty. Very good. The price hasn't broken support yet. Right? We know it will. Eventually, it will break support, right? All right. Now, where would our first support be? Our first support, if we're going to put a stop loss, if we bought here, right, where would be our first stop loss? Our first exit? it would be here. Our first exit, this is resistance, this is support right here. So our first exit, so we know, guys, going in, right? This is how we control our emotions, right? Going in, we know that, hey, we're gonna buy here. Worst case scenario, if the price breaks support right here, we're going to get out. All right, very worst. So now we can totally relax. All right, we can totally relax because we know that, hey, if the price breaks support like it did here, guess what? Sellers are now in control. We have to get out. So we would buy here, sell here. If we're going to put a stop loss, like Louis said, we would put it right below support right here. All right. Now, the price has gone up. It's in the markup phase here. It's gone up pretty nice right here, right? Where would currently, right? So now currently it's in the markup phase. Where would we put our stop loss now? Or where would we get a trigger to get out now? At here. Let's do this. Hold on. All right. Where would we put a stop loss or a trigger to get out? All right. Here, or here. Anyone? Where would we put a stop loss, or where would we know that the system, all right, or based on support and resistance, right? If the price fails, where would we get out? Here. Resistance becomes support. So this is now support. Resistance becomes support on the way up. So now our exit, let's say the price does this, our exit would be here. Not here anymore, not below here. So our stop loss, if we're going to put a stop loss, would be right here. Otherwise, we just let it go, right? Let it go. All right, good job. One more. Let's look at for one more. All right, so we want to take, right? Always remember the 4 market phases. We want to take the 4 market phases and we want to bring that real time to our trading. And that's how we analyze the charts, okay? All right, here's another one here. It's a good one here. All right, let's bring it right here. All right. What phase is this, Darlene? And anyone else, you guys can answer, right? But this is Darlene's question. So, all right. What phase is this?
This is a markdown phase.
Markdown phase. Very good. What phase is this?
Markup phase.
Markup phase. All right. Who is in control here? Who's in control?
The buyers.
Buyers. Very good. So price went up. Markdown phase. Didn't last very long, right? Sellers came in, red candle, the price broke support. What do we have to do? What do we have to do? What do we have to do? What do we have to do when the price breaks support? Exit, sell, right? So we bought here, price broke support, red candle. Here was our sell signal to get out. So we bought here, sold here. Who was it? Betty. Right? We talked about this earlier, right? We want to get out when the sellers get in, price broke support. Right? What happens if what could happen, right? What could happen if if we don't get in when the sellers come in, if we don't get out when the sellers come in, when the price breaks support? Here is your support right here. Here is your support. Here is your resistance. So it failed. The accumulation phase, the markup phase failed. Sellers came in, red candle. We've got to get out. This is what could happen if we don't get out. All right. Betty, go ahead.
So yeah, so David, so the system is gonna can we set an alarm when we get the selling, when it triggers to sell? Do we have an alarm that we have to get out?
Yes, we with the systems we do email alerts. All right, but most of our traders don't use the alerts. All right, you can watch it, you can pay attention to it, and yeah, but you can turn on an audible or an email alert. Okay.
Okay.
Okay. So our goal is this, guys. Our goal is this. When we trade, we want to minimize our losses, maximize our opportunities. Okay. So we want to cut our losses quickly. All right. Cut our losses quickly. If we stay in a losing trade like this, we need a lot of profitable trade to make up for this loss. So when we're wrong, and we know that we're wrong, when sellers come in, price break support, we just have to get out. All right. But that doesn't mean that we can't get back in. We can get back in. When do we get back in? When do we get back in? Right here. Right? When the price breaks resistance again, when we know that buyers are now in, buyers are now coming in, and we buy here, and we're going to take that trade up again in the markup phase. Okay? So we don't get emotionally attached to any particular trade, guys, right? So just remember, buy on a break of resistance, sell on a break of support. Buy on a break of resistance right here. All right? What phase is this right here? What phase is this right here? What phase is this? Darlene, what phase is this?
Can you do that again? Which part?
Right here. What
okay,
phase?
This is mag up phase.
Very good. Very good. And what if the price breaks resistance right here, this yellow line? What phase is that? This yellow line right here. Look at your 4 market phases. See, it's heading towards right here. Here is this candle here, heading towards this yellow line. If it breaks this line, what phase is that?
Is it distribution phase?
This is distribution here in the markup phase. That's reaccumulation. All right, so you can add to your position here. Very good. Very good. Okay, good job. All right, good job. So that's how we analyze the charts. That's how we analyze charts based on the 4 market phases. All right, very good. Okay, now Miss Mary. Oh. So your question was, and this is the last question, how many forex pairs? All right. Now, Mary, let me ask you, why did you ask that question? How many forex pairs do we need to get?
Because what happens is sometimes you are doing fairly well, and then a few pairs open up, and you add on.
Okay.
And then you start to see your overall account as some don't move. You begin to see your account go down. So you figure at that point, did I take on too many pairs, or what was the prudent thing to do?
Yeah. So I have a heavy foot. When I drive, I have a heavy foot, and I've had it for years, right? And I tend to do that with trading too. All right. So, but there are times, right? There are times if you have to pass, if I'm on the highway and I need to pass someone, right? I need to put the pedal to the metal, right? But there are times when we just need I just need to kind of slow down. So it's the same thing, right? There's no fast rule on how many pairs to trade, right? So rather than, because what could happen is this, right? If the market's really moving, right? Market's really moving. Like we know stocks are really moving right now. Even and congratulations to Dean. Dean took this trade with US 30 here. Solomon, I got on Solomon yesterday. He missed it. Let's see here. This trade right here. So I rather than thinking in terms of how many positions, here is the US 30 trade here. So in terms of, and this is for everyone, right? And I know with new traders, as you start, you need to go slow, right? But Mary, you've been with us for a while now, and this is the way I want you to think. Okay. When the market is ready, not when we are ready, when the market is ready, all right, and you guys, you'll know when the market is ready, right? We'll send out notifications, right? We do our every Sundays through Thursdays. We do the live stream. All right. So we send out message. We always know when the markets are slow and when the markets are moving. All right. And you just want to get a feel for the market. When the markets are moving, right? When markets are flashing, buy, we need to buy. You can have more, always manage your risk, right? So, we don't want to go more than, 25%, 20% of our, we don't want to trade more than 20% of our overall. Some traders go 10%, no more than 10% of our overall account size, and no more than 1-2% of in an individual trade, right? We know that, right? And some traders, based on your experience, you can do different things, right? You can trade a little larger, okay? But Mary, it's going to be based on not what we want, but what the market is doing. So if the pairs are really moving, right? Let's say you got in a couple of pairs, 2 pairs, you're in really good profit, right? 2 pairs, you're up several hundred pips, right? You can add some more pairs, right? Like the dollar pairs did, the yen pairs did, especially the dollar pairs, right? So let's say you're in the dollar pairs, you're $3 pairs, each of them are up, over 200 pips. You can keep adding, right? You can keep adding. But let's say you're in 3 pairs and, a couple of pairs are down, right? 1 pair is up, right? You might be up total like 50 pips. Don't add. Don't add, because what we're doing is we adding on risk. We adding on more risk, right? When things are not really moving. So the way we want to look at it, things are moving, you up in profit, and just do one at a time rather than taking 2, 3, 4 trades. Take 1 trade, because we trade a lot of pairs, right? So if we trade in the dollar pairs, we might have $10 pairs, right? Trade 1, because there's always a few laggers, right? So take 1 trade, perhaps 2, let it go, let that trade develop, all right? If you're in really good profit, right? If you're in really good profit, then you might look to add a different pair, all right, within that same group, or even another pair in a different group, okay? That's the way you want to do it. If the market is slow, if things are soft and your pairs are not really doing anything, don't add on. Don't add on. All right? Don't add on. All right? Let those like this trade right here. All right? Buy signals here. That's a really, really good trade. So I would leave that trade here. That's in really good profit. The likelihood that this trade you bought here, right, it's still holding here. The likelihood that this trade here would collapse with a loss okay, that's unlikely based on where it is right now. Could it happen? Absolutely. So with a trade like this, right, I would certainly look for other opportunities. I would say, okay, I've got pretty good profit here holding, right? Now I can add on more risk while managing this trade. Okay, that makes sense, Mary?
It does.
Yeah. Okay, very good. What we don't want to do is this. And a lot of us, we do that as traders, right? When the markets are quiet, we put on more risk. So when the markets are quiet, we trade. And then when the markets are really moving, guess what? We don't trade. Okay, or we don't trade the amount that we need to trade. So when the markets are really moving, right? Markets are really moving, that's when we need to be a bit more aggressive. All right. So, and then when the markets are quiet, right? They're consolidating, right? They're trading within that tight zone. We need to slow things down and almost not trade. All right. So it's the amount you're going to trade is based on what the markets are doing, and then based on what your individual trades are doing. Okay. Okay. It's much easier for us, for our emotions, right? And the way, if we're in profit, to add on more risk. We still have to be careful, right? But it's much easier on our trading, right? When we basically, what we're doing is I know we haven't closed the trades yet, but we're taking those profits, right? We're taking the profits because our account, and we just adding a little bit more, pushing things a little bit, right? Systematic. All right, very good. Good questions. Good questions. All right, we've gone over 12:22. All right, thanks guys for coming. All right, we'll do this every Saturday. All right, every Saturday. Any questions for me before we leave?
Thanks, David.
You're welcome. Thanks, Dean. Good job. And guys, Dean is in this trade. Dean, did you close it out, or are you still holding on it over the weekend?
Yeah, still holding.
Good job, buddy. You might get a pop. Let's hope you get a pop.
Yeah.
This is a great trade here going. Yeah.
One quick question, David.
Yes.
Do you want at some point to explain to us what the different systems do? I know for the stocks, I know the difference between the scalper and the dominator, but for the others, I don't.
Oh, okay. So futures. So this is futures. We trade Monster. We have about 19 systems now. So we have this is for futures. So and this is the Monster US 30. So that's the Dow. We trade the Dow, but that's very fast, right? Very, very fast moving system there. Okay. Perhaps the next week, if you guys remind me, we'll go through the different systems. Okay. But we trade forex, we trade crypto, we trade equities, futures. So we trade all the different markets. But your level, right? It really depends on where we are as traders. So a new trader, right? Unless you're very skilled, right? We wouldn't recommend the system, right? We recommend forex, equities, all right, and then graduate to these systems right here. This is by far, right, this system here, Monster US 30, right, in the futures market, and then this one here, the NAS 100 in the futures market. Those are very, very fast moving systems. Can you make a lot of money? Yes, but you can lose a lot of money also if you don't know what you're doing. Okay, the goal is to trade some of the slower moving markets, all right, slower moving systems, and then graduate, all right, to some of the faster moving markets, faster moving systems. Okay. So yes, Mary. Yes. Okay. All right. But perhaps remind me next time, next Saturday, and we'll go through each system, the pros and cons, and each market. Just remind me, because I'll forget. Each market, pros and cons. So make a note to remind me next Saturday. Okay. So, and then guys, come on the evening classes that we do. Okay. So our beginners class, our Q&A class is what we did here. Sundays, where you guys will learn a lot and even get kicks, right, is Sundays through Thursdays. We'll go through each system, each market, show you guys how we look for opportunities and look for real live examples and trading opportunities. Okay, so I am really glad we're bringing back the beginners class. I really missed this class, and Saturdays is a good time to do it. Okay, our new traders that are coming in. I know this might be, this is all new. Okay, but this is what we do. And just remember, right? Just remember support and resistance and the 4 market phases. All right, you guys need to know that, right? You need to know that, you know, like I said, take a picture of those charts, print them out, laminate it, okay? So that you guys have it. And if you guys need me for anything, you guys have my information to contact me. All right? Thanks, guys. Hey, have a great weekend. Have a great weekend. And I'll see you guys, guess what, tomorrow, Sunday.
Thank you so much.
One last quick question.
You're welcome.
Yeah.
Hey,
Great
Jonathan,
weekend,
go
Mark.
ahead.
Yes. So just before I leave, I have my laptop open. What am I looking for to download as far as the platform? Is it just forex and from there?
Download to do what?
To start trading. If I were to start trading.
You ready to start trading? Get some coaching. You need coaching first.
Well, yeah. I mean, just to get familiar with how the app works, I could look at it and the graphs or whatever.
Yeah, so what we use here, we have a proprietary system here, but it runs on TradeStation. So if you wanted to get the TradeStation platform, you can do that, okay? And then we use forex.com, okay?
Okay, gotcha.
Okay, but you can get with me also, all right? All right, guys. Okay, take care, guys. Have a good weekend. See you guys tomorrow. Bye-bye.
Bye, guys.
Thank you. Bye-bye.